Turnaround Tuesday, everybody. How's everyone doing today? Everyone doing okay? All right, I have a couple of things I want to talk about before I pass it over to Blake. So for Turnaround Tuesday potential scalp, I'm thinking the yen could retrace back to the breakout. First stop would be here around 107.08, kind of where it turned good here. Potentially this could happen with a little bit of risk off happening. Also, yields have bounced pretty good. Maybe that's about it for yields for a little while. We'll see. Here's the 10-year. It's been a nice rally. Maybe we could go 170. Back under 160 might light it off for another push to new lows. TLT did put in a real ugly day yesterday. Okay. And it's a two drive so far right here. So we'll see if we could get a rally in the bonds. Perhaps the yen comes off. Also, I want to point out gold has pulled back right to this throwover line right here. So best guess for today, and I'm not talking about a major trend, would be a bounce in the metals. Actually, silver is acting a little better today than gold. Here's gold holding its throwover line. So we've had 58, about a $70 break in gold. So why can't we rally back 35 bucks, maybe 15, 20 in the next several days? Silver acting, well, now it's not, but I'm going to go with gold because of how overdone the gold silver ratio is, thinking that gold could bounce. Like the yen, I'm not going to fade the crude. We just had the confirmed breakout yesterday. And I want to look at this. Aussie Kiwi keeps struggling to make a new high, almost did it early in the week, which was yesterday, and thinking that there's a chance we get a rollover in here. A lot of confluence in this pair down around the 105 level. So we'll see. That's a possible turnaround Tuesday candidate as well. And I think that's really about it. I want to get long euro, but when I look at the 1 hour here, I think I'm still going to have a chance at maybe 10.55 to get long. This looks like it's corrected. Maybe this was A, B, C for A, and this was B, and now we're going to get an A, B, C for C before we get another run to the upside in euro. But this is not the area. I'm going to try and be patient. Plus, euro still is weaker than cable. So cable has a little better pattern. We'll see. I know a lot of the guys here were looking at this major resistance that we've gotten back to, this 123 level. Is that it? Look at the weekly. Yeah, just looking at this as a pivot. Cable could have some more left. I'm sure they're not through squeezing if the dollar is heading to 94. So Dixie up a little bit here. Could be setting up a pretty nice rally to sell in the Dixie. I just don't think this is a great area yet. And one of the best areas to hang out during market hours is right in here in the chat room with people that it's really not a hobby. And Amanda's back. So Amanda sharing her work and Paulie sharing his work in members chat. Plus, I know that by now, a lot of our membership know what a great addition to our team Paul Franco has been. His numbers are great with his bias chart. I've been watching him since he came, and every time he comes on and steps into phase, he lays out numbers that I've seen really be great technical areas. And, I've learned from him where he'll look at his levels based on where the volume is, and discount wicks. And, that's something that I think is, I haven't been doing, but I'm looking at it and see what I mean. I mean, we learn from everyone. If you keep an open mind and not think that your way is the only way, and you could have a good way, but you could even make your way better. Huh. Who is that robot? You know, the only robot I liked was on Lost in Space. You guys ever see that? Hello, Ingmar. How are you, Hammett? DJ, Cheryl? So, you know, we have a big promo coming. I believe it's Monday. So everyone in the peanut gallery, this is going to be a great chance for you to get value at an even better price. Yeah, that's it. Ziggy knows it. Danger, danger, Will Robinson. And then they turn him off and you go, ugh. Anyway, so, you know, check your finances. Cheryl's excited about it. Cheryl, we're excited about having you join and be part of our community. So I wonder what's going on here. So some active stuff going on here. Andre has a shark there. Blake's active. Blake's always active. I was surprised. I asked him yesterday if he was trading during the Cardinal game, and he said no. That's the first time I ever heard him say no. Blake's doing well on the long side of Euro. So yeah, yeah, that looks good. Andre's cleaning up in Kiwi. Greg is doing very well in Aussie. Stelios down in NOK, but look at Stelios on Euro GBP. So, you know, just because Stelios is waiting for 83 or any of these other trades from where he did it, you have a lot of profits and you may want to hold for long-term target, but there's never anything wrong with partial profits. Okay. What I like about partial profits is, you know, there's nothing technical about it, but there is something very psychological about it. Because, you know, if you're doing this for a living and you're holding a position trade, you never get paid, right? So we need to get paid. We need to generate revenue. We have mortgages to pay and kids to take care of and vacations to take if you're Steve Volge, who broke the record in August for most vacations by anyone I've ever known in my whole life. All right. So if you take partial profits, what's great about it is if the market keeps going, you're still there instead of saying, no, I should have stayed. You know, I left all this money on the table. And then if you were right to come out and you still believe in the trade and it comes back on you and you still believe in it, you can recommit. And you know what? You're recommitting with profits on the trade rather than principal. And you could always, after you take partial profits, move your stop to BE. I know, you know, it's not rocket science. I know a lot of people that do that, say they're up 20, 30 pips on a trade. They'll take half and trail their stop to BE on the remainder. And what a great position it is. Steve's talked about it a lot, where you have no risk. You have no heat. You've been paid. And if the market continues, you're still there. So, everyone raise their hand if they haven't been doing that, that they'll at least give it a try to take partial profits on a winner and then tighten up the stop. Okay, Cheryl raised her hand. Anyone else that hasn't been doing it? Well, we probably have a lot of sophisticated traders in here. Just from hanging out in face, you've become sophisticated, right? LOL. Okay. All right. So, Blake, a doubleheader, Monday Night Football. They were, the first game was amazing. How do you do that?
Amazing. Yeah.
Yeah. How do you do that? You, say, for example, in Huss, you normally trade a full contract. Do 2.5s. Okay. And then you can trade one, hold one. Okay. That's how you do it. Yeah. I mean, Drew Brees, huh?
Oh, are you talking to me now?
Yeah, I am now. Yeah. Drew Brees.
Yeah. He's almost your age, and it's pretty.
I wish.
Yeah, the guy. It's pretty amazing, actually. Yeah, it was great. Well, at least the first game was awesome, and I didn't watch the. I fell asleep too.
Did the Raiders win?
I think they did. I'm pretty sure they did, and
okay.
All I know is my my last player for fantasy football had
injured.
No, he put us over the edge. So once that happened, I was like, okay, I can go to sleep.
All right.
That was Philip Lindsay for the Broncos. Anyway.
Okay.
Yeah, but the Saints game, that the Saints Texans game was probably could rival the excitement of the Cardinals game.
Back and forth.
Oh, it was so good. It was good. It was amazing. All right,
what do you got a flag there, man? For me?
No. Well, we have just a really quiet consolidation. You can see the euro ahead of the ECB. We are just consolidating. I'm sitting here hoping that the euro can dip to 110. This consolidation that you see here will break out before the ECB on Thursday. I mean, this is a 4-hour chart. We're not going to
triangle.
I mean, I'm making a claim that may not happen, but I doubt we're going to get too far out of here.
A lot of people waiting to sue you if it doesn't happen now.
Yeah, it's just really, it's like we're going into Thursday and there's nothing happening. I mean, it's a very, very slow market, and I mean, we would all been better off just kind of sleeping in. But I did have somebody in the chat room, Madeline. She brought up a chart, and I thought I'd talk about it. I'm going to use this as an opportunity to do a little bit of training. I want to take a look at the pound Canadian really quick. It's and she was looking at this saying, hey, this is a inverted head and shoulder pattern. So and this is great. I'm happy to actually look at this. Let me grab the I need this. And she's looking at this, right? There's your head, there's your shoulder. And then looking at a breakout like this, right?
Yeah.
Okay. That's what she was looking at in her chat room. Now, when you're looking at like a chart pattern like this, let me first and foremost say that I don't look at head and shoulder patterns unless there's an arm, meaning that we have to see some sort of, let me grab a drawing tool really quick, annotate,
an arm.
Draw. Yeah, we need an arm. There's no arm. So what I tend to like to see is like, price action that makes its way down to here. And then it has an arm to complete. You can measure it over onto the other side. That to me is an inverted head and shoulder pattern. Now, one of the things that you could look at it as though is just a consolidation. It's, in my opinion, it's just a simple triangle, really, or even maybe even a wedge, something like this. And it's going to play pretty much the same. But the difference that I when I see something like this is I don't try to get a measured. See, there's no arm to measure, so like whenever I see an inverted head and shoulder pattern, I like to have some sort of arm where I can go, oh, okay, here's the measured move. It's going to go from here to here, and that's going to the head to neck. So that means you have a measured move all the way up to 167. Let's just say 167.
Where's the thumb?
Yeah, well, there's just nowhere to measure. So what I do is when I see a triangle like this, I might go, okay, here's the. That's not what I wanted. An extension, I might only look out of the triangle. I might only look for a move to the 127% extension, maybe the 161% extension, and that's what I would look for versus trying to get a whole measured move out of here. And that's important because what happens is if you don't measure it, or if you measure, oh wow, look at the cables actually making a little bit of a move here. You were talking about that earlier. When you are trying to measure some sort of move, the problem is that you might stick around and trade a little bit too long because you had it measured a certain way, and then it doesn't come to fruition. So anyway, I just wanted to bring that up because it was a topic of conversation in the chat room, and it's not we talk about charts all the time. Actually, days like today, sometimes we just talk about nothing because there's not a whole lot happening, and that's just a problem with the market sometimes. But right now, I think the pound Canadian does look constructive. I actually do. I like the cable actually on the long side against a lot of different currencies. I don't own any pound. I'm such a bozo. I was long the pound dollar yesterday, and when we failed up here and we came down as the speaker resigned, I'm like, you know what, I'm just going to take it off, and I think I got out at 123.32 or something like that. I'm a little bummed out that I did, because now I'm looking at it, I'm like, it still looks constructive. And frankly, just as we were talking about the last couple of days, a break above 123.75 I think is bullish. We're there. We're basically right up against resistance right now too. So it's still shaping up. I don't think technically anything has really shifted, with the cable. I still think it looks pretty good here. And I think if you're short, you're probably, wondering, oh crap. Now, as far as the euro dollar goes, like I said, I think we're in a, just tightening this range. I doubt we're going to sit here for another 2 days. It's possible. But remember, tomorrow we have, I think tomorrow we have CPI. Tomorrow we have PPI, sorry. So tomorrow we have PPI. That might get us out of this range, but I wouldn't be surprised if we consolidate throughout the course of the rest of the day in this very tight range. So what I'm trying to say here is any dip down to 110.20 should find some support. Any rally back to 110.60 should find some resistance. Try not to get too carried away with getting aggressively bullish or bearish the euro, especially ahead of the ECB. Remember, the market has some pretty lofty expectations for the ECB on Thursday, meaning that everybody is expecting some pretty dovish action with the ECB, and the steps that they're going to take, and there is room for disappointment, because everybody is expecting quite a bit from the European Central Bank. Now, let me see if Stelios is here. I want to see if he has any comments regarding the pound specifically.
Yes.
Hey,
good morning. Well, the good news is that UK Parliament is closed now.
Yeah.
So there's not going to be
till October 15th, right?
14th or 15th or something
like that.
Yeah. We did have this morning, we had some important data. So we had average earnings index plus bonus, which came in at 4% year on year, which is, a very good reading, that's for sure. And what the Bank of England, what everybody does is they compare this to inflation, and they look at the gap, and the gap is pretty healthy because inflation is at 2% or 1.9 or something like that. So for the average consumer and an average person in the UK, it's good to have your earnings grow faster than inflation, that's for sure. Now, the other thing we had is that we have, I think there was a comment from Boris Johnson last night saying that he really wants to get a deal done, and he's I think what he really wants is to get a deal done. Can he do it? I don't know. But he has said in the past that a no-deal Brexit would not be a good outcome, and I think we can all agree on that. So that's going to happen. Is something that's in the background as well. Yeah.
So they debated really late last night a general election. What happened with that?
Good question, actually. What happened with that? Can somebody help? I don't remember that.
I think it was late. Was it last night? Wasn't it late last night that they
happened? Nothing happened.
Was I asleep?
Nothing happened.
You might have been, actually. Nothing happened, huh, Steve?
Yeah.
Okay, fine.
That happened. Okay,
Hey,
sorry.
Blake, take a quick look at gold. I think it's trying to come out of here. I'm getting a little reversal candle.
Gold.
Here. Yeah.
Well, first of all, I actually want to buy silver, and I was hoping it would dip to one more level. But I'm looking for gold to get down to 1480 or 1490 right now, and then silver as well. And I think,
can I show you the line it's coming off of? Do you want to see it?
Yeah, go ahead.
All right.
Go ahead. Let's see what you got.
Here. So this thing here was where it really accelerated over this this wedge line.
Got it.
And see how it's coming right off here right now. And we're putting in a higher low right now. Just I think that, everyone's trying to buy cheaper, is that you might get your 1480 buy, but maybe we go to 15 and a quarter first. That's all. If we get back above this wedge line. So we're in between the throw over and the wedge line.
Got it.
Take it.
Okay,
back,
so basically what you're looking at here, what you're looking at here is this.
Yeah.
Yeah.
Close
yeah,
enough
something like that. Yeah, exactly. Whether you want to look at it like that, or whether it's like that.
And it's been $70, maybe like 38% back or something like that.
You can see the reason why people are nibbling at it here, and it makes sense. I mean, I like I said, whether it's here or whether it's if I trade in multiples, multiple lots, multiple positions. And if you're like a gold trader, which, for me, I usually just, I might buy a couple contracts of gold, and I do it for myself. Whenever I trade like precious metals, I might just, I might buy one here and one here, if I'm going to trade multiples,
and you should also play Goldfinger in the background.
And I don't play Goldfinger, but
I do.
I'm sure you do. But those people that are a little more patient, maybe they're waiting for a little if you even get it, push below this low.
Yeah, I could do that. Sure.
Just to knock out a couple of stops, and then you want to be on the other side and get long. I mean, but I see where there's a lot of support, and I can see why we're just holding these levels, because it is an attractive level around here to be long, and that's probably what people are looking at currently.
Yeah, just I'm always amazed, even though I've seen it so many times. You draw a line that you've had in there for weeks or months, and you actually get market reactions to it.
Yeah, right.
It surprises me. Why should a line do anything? Yeah.
Well, this was my chart of the day yesterday, and I was really after this. I think there was some news with Japan wanting to ease a little bit more. Actually, Stelios might have caught that headline that came across a little bit earlier. And the BOJ had released a couple headlines here, and I was hoping the Aussie yen would actually spike up to 74 to new highs. I am a seller. I have my orders are still out to sell the Aussie yen at 74 basically, and I was hoping for a move right above the highs to sell right into this previous support, act as current resistance, 618 retracement. I was just waiting there, and frankly, I don't know if I'm going to be able to get it. Stocks are looking like they might roll over a little bit here, and I haven't started chasing. In other words, I haven't started selling the Aussie yen just yet, but I'm very tempted to get short here. I mean, you know, look, if you look at the 4-hour chart, it's very overbought. It's you know, we've had a nice snapback rally. I think we're not going to see above 74, at least in this move higher. I wouldn't be surprised if we move back to 73 and then back up again and to test 74. So I haven't shorted it yet, but it is something that's on my radar. That was our chart of the day yesterday. By the way, that was our chart of the day that I'd selected. A couple other things I guess I should mention before Steve gets here. You know, the S&P really is still struggling at the, you know, this is the underside of the broken trend line. You know, we're struggling to get to 3,000, and I think that's one of the reasons why the Aussie yen hasn't hit new highs, is because we haven't seen the S&P, you know, make it, you know, lurch up to that one, you know, last move up to 3,000, which I think we're going to do, but I don't know. It's now I'm starting to question that, all in all, but overall, it's very quiet. Oh wow, the dollar Mexican peso is coming off pretty good here. We might actually hit new lows. It's very, very quiet. Like I said, I'm being very careful the next couple of days. I think tomorrow we're going to get PPI, which could move the market, but it's really Thursday's ECB meeting everybody's waiting for. I know people that aren't even coming in the office today because it's so slow. And the market's just consolidating right now, but that doesn't mean that we can't get moves. And one of the things I always try to remind myself, as much as you know, I just want to get up and kind of leave. The fact of the matter is, things can happen quickly, and the only way you're ever going to get paid is being in front of the computer at that time. So, you know, just being ready for a move, like, you know, because something could happen. Something could happen at any moment, especially in this environment with the Trump administration, with China, with Brexit. You know, they're you know, China headlines. I mean, things can happen. That's why for me, it might be a little slow right now, but you have to be in front of your computer and ready to act at any moment, and that's, you know, what we do. But I think this euro dollar, I'm just waiting for a little dip, maybe back down to 110, so I can get on the long side, because I think that the ECB will not be as aggressively dovish as the market expects. All right, well, I'm going to bring in my colleagues, and I don't want to talk about all the other crosses, so I can leave Steve something to talk about, but Steve always finds something to talk about. Morning, Steve.
Good morning, Blake.
Blake, before you go, I just want to say one thing. The best robot ever was Marvin.
The best what? The best what?
Best robot ever was Marvin the Paranoid Android. The best robot. Come on, you were talking about the robots.
Oh, no, it wasn't me talking robots. It was Coach talking about robots, but I have my own better robot than both of you guys, but go ahead.
No, I was just going to say it was Marvin the Paranoid Android from The Hitchhiker's Guide to the Galaxy. Our British listeners will know what I'm talking about.
Actually, that guy's pretty good. My favorite robot is Vincent from the Black Hole.
Oh, I don't know that one, actually.
What? You don't? Do you remember the Black Hole movie?
Oh, a long time ago, yeah. I don't remember the robot, though.
Vincent?
Okay.
Hold on. Black. You don't remember this guy? He was a train wreck too. Well, actually, I think it was his this guy.
Oh yeah, I remember. Yeah, I remember.
Yeah,
that was good. Yeah.
Yeah, I mean, this is classic, guys.
Oh, this is a long time ago.
Yeah, way long time ago. All right. Anyway, 1979.
You old people.
We are old. Steve wasn't even born then.
Yeah, but I actually had seen the movie when I was very, very young, like 4 years old or something like that, because I was very fascinated. It was playing 5 years old, something like that, because it was playing on TV, and, you know, whenever I saw space, you know, I was very fascinated with it. So I do remember the robot even from back then.
It's great movie.
But
anyway,
Lost in Space.
Steve, nobody can hear you in space. That's a problem for you. All right, Blake, thank you very much.
All right, guys. Hey, have a great one. Good luck today. And remember, visit Forest Park FX, our webinar sponsors. Make sure you visit them and their site and see what they can do for you. I'm going to leave it to you guys. Have a great one.
You too,
Thank you,
Blake.
Baker.
If you can't see the forest from the trees, go to Forest Park and have a picnic in the market.
Ooh.
Ooh.
So yeah.
I want to say thank you to our friends Steve and John, who said about the election vote. It was a vote for a snap election and it failed by a huge margin. That's probably why it didn't make the news.
Yeah.
Oh yeah, okay.
Stavros likes that one, the Forest Park. I'm going to sell that. I'll write a song for them. I promise I haven't hit the bong this morning, okay?
we have to take your word for it, coach.
Okay. Let's make money.
What else did we have this morning? We had some CPI readings. Chinese CPI was higher than expected.
Oh, you can't believe those people.
I can't believe them, yeah, but it was, the headline number was, and then the Nordics didn't do so well. Norway and Sweden was lower than expected by a couple of tenths, so that's why their currencies are retreating a little bit.
Yeah, anyhow, they were bound for some type of a rebound because in the short term, they've been selling off quite nicely during the past few days, Stelio.
Yes, absolutely.
As you very well know.
Nothing goes down or up in a straight line, and we know that. But I really think the main mover is going to be ECB tomorrow, and really the Fed on Thursday, because we're still pricing 25. But there is a risk for more. But really, the more important thing is what they're going to say and how it's going to change the forward
The
path.
Fed is next week, right?
Yes, next week. Yeah.
Yeah. Okay.
Yeah.
Yeah. In this case, Stelio, last time I checked,
16th. Actually, no. What am I talking about? No, that can't be 16th. Hold on. I'm just checking now. Tuesday, Wednesday. Yep, it's on Wednesday, the 18th. Yeah. 16th is a Monday.
Stelio, what is the market currently pricing in? Last time I checked, I think it was Saturday or something like that. Friday, Saturday. The market was pricing in barely above 25.
Yeah, 20. Yeah, tiny chance of a 50. So we're like 26 or something like that. So yeah, call it 25. Call it 25.
So in my opinion, any risks to the dollar having to do at least with what the market is pricing in from the Fed is to the downside, simply because I find it almost impossible that the Fed is not going to hike, is not going to cut, sorry, and the market I think is definitely pricing it in, so they will cut by 25. But on the other hand, anything negative we get until then has a decent chance of tilting the market to expect a 50. So I think whatever surprise we get from today that we're speaking to the 18th can only be to the dovish side, in essence. I don't know if you agree.
Yeah, I agree with that. The question though is we're pricing 3 more cuts until 2021. So it will depend on what the market goes to do with those. But I agree with you 100%. The initial reaction.
Obviously, the pricing in of the market up until what happens to 2021, one way or another, irrespective of what happens at the 18th, I believe is very, very, very conservative. I think that we're going to get more than 3 cuts up until the end of 2021. That's my...
We could get them in one go, you know that.
Actually, yes. Actually, we can easily get the 75 base points in one go. That's not going to be, of course, the 18th. There's absolutely no chance that they will cut, by 75 basis points. But to be honest, it's easy for them to cut 75 base points within the next 2 months. So,
Yeah, and we know that the Fed is always aggressive when it comes to cutting. We saw that in 2008, 2009.
And I think you can square that considering the political circumstances, meaning that we have an election coming in, what is it, a year from now?
Yeah, more or less.
A little bit more than a year from now, yes. So, if you take that into consideration as well, I think that, we might see them being more aggressive than they would be otherwise.
Yeah. And imagine what more easing than expected will do to stocks, which is what they're interested in, really. And, people, I've had this discussion with people who are saying, no, but look, in 2008, they were cutting like crazy and stocks tanked. Well, it was quite different then because we had a near collapse of the financial system. We're not talking about that now. We're talking about, a recession and just something that is...
I'm not so certain about that, Stelio.
Well...
I see a lot of I see a lot of people in essence agreeing that this is going to be a garden variety recession. And from economic history, we've seen multiple times that usually the size of the bust is proportionate to the size of the
bubble.
Yeah, and in this case of the bubble. So I know that currently there is no specific sector that the market is really focusing on, like, a perspective devastation coming. But, I can't get out of my mind exactly what I just told you, that, the size of the bust usually is proportionate to the size of the boom. And we know that this has been the longest expansionary period we've had in history, based on what? Real fundamentals, the health of the global economy, real productivity growth, none of that.
It was all because of low rates, or most of it.
Yeah, but at the same time, we know that this has been the cause of all the last booms, right? I mean, and the housing bubble in 2007, 2008, before it imploded, how was it inflated? Simply because interest rates were not where the market would set them, were not where they would promote the ideal distribution of capital, quite the opposite. And, if that was the case back then, which we know was the case back then, what reason do we have to believe that even bigger malinvestments haven't taken place since? So the only question in my mind is, how are the regulators and the politicians are going to handle it? Because if for some reason there wasn't a doubt about the ability of, for example, central banks to defend a bust, then there would be no question about it. We would have like a huge recession. So the only question here is, do you believe it's going to be a garden variety recession? The only reason for you to believe that, and by you I mean generally speaking, not you specifically, is to really believe that central banks will find new ways and new tools to stimulate the economy without market participants losing completely confidence in them. I need to remind everybody that Bernanke, in his time, when they took all the measures that were needed to get out as fast as possible from the financial crisis in 2007, 2008, what he said back then is that we're going to have extraordinary measures having to do with monetary policy, quantitative easing, and cutting rates to zero, but have faith in us because that is all temporary, and we believe that we will be able to reverse that process and bring everything back to normal. So if indeed we're now headed into a recession, which my opinion about that, yes, we are, without the Fed having managed to normalize rates, because of course 2.5% is not normal rates for 1 year, first of all, and second of all, the balance sheet has been reduced from like 4.5 trillion down to, what is it, 4 trillion, just barely below 4 trillion, something like that.
Yeah.
Then the whole argument that don't worry about it, extraordinary measures, but it's going to be temporary, we're going to reverse it on time, and then everything's going to be back to normal, then even the most naive people that might have believed this story now know, when you get new quantitative easing and going back to zero, that was an actual plan, but it failed. So then the question is, how much faith is the market going to put to whatever new plans central banks are going to have in place to get the global economy out of the next recession? Because we take faith for granted. But I don't think that's going to be the case, in eternity, right?
Yeah, good point. I mean, I don't know. It's they have weapons to use, and we know they're going to use them again, and probably in a much bigger size than they had in the past. But who knows?
Yeah, but what was the silver lining? That's a question. I mean, what is the point that people say, okay, okay, this thing isn't working, so get out of whatever it is, and yes, they might stocks might not tank as much as they did in 2007 and 2008 in nominal prices, but they might do in real prices, right?
Yeah.
Anyhow, chart time. So, we could rant a little bit because I have to be very honest. Since yesterday, there is not that we've had, since yesterday's webinar, we haven't had like any worth mentioning price action. I mean, some things have moved a little bit, but we haven't really seen any big follow through. I mean, starting from the DXY, which is very indicative since it affects quite a few markets. If you see, yesterday we ended up having an inside candlestick, and today so far we have an inside spinning top to yesterday's candle, which was also an inside candlestick, which means that the dollar is consolidating here. No big surprise. I think that market participants have started paring back bets for two reasons. One, we have event risk coming. The ECB, and after the ECB, whatever moves we get for a couple of days, I believe then the market is going to pause once again in expectation of what's going to happen in the 18th. Are we going to get a 25 base points cut? Are we going to get a 50? Are we going to get, very dovish rhetoric? Are we going to get more conservative rhetoric? Because I remind you that Powell was speaking a few days ago, and his rhetoric was quite a lot more hawkish than the market expected. So I do think that the market is somewhat perplexed, and this is probably one of the causes why we do have some reduction in volatility, both in FX and stocks. I wanted to start by talking about the metals. I heard your point of view, Dale and Blake's. And yes, I mean, the precious metals are approaching some interesting levels as support. But personally, I don't know. I find it quite hard to believe that this sharp move lower is going to be done and over so simply. And, this prolonged move higher is going to to finish to
that's
have
all I'd be looking for, Steve, just like that.
Yeah. So in my opinion, whatever rebound we get from gold and silver has a very, very decent chance. This is a 4-hour chart on silver, and here is the 4-hour chart on gold. Has a very, very decent chance of having a short life before we can see more downside. Now, after another leg lower, by the way, I'm still short gold, so I'm in the money here and quite happy about that. But yes, we might get a rebound from here in the short term. I do think that the initial rebound is going to be sold by the market, and then after we get another leg lower, perhaps when people start getting a little bit more scared that gold and silver might have topped instead of producing some type of a corrective move. I think,
Steve, if we get that bounce you're projecting right there, people start calling these lows here and to the left a neckline of a head and shoulders top.
Might be the case. Depends, of course, on the structure. I mean, how sharp it's going to be, because, for example, if we get a rebound within a couple of days and then we get a move lower, as you understand, the symmetry is going to be completely absent for somebody to claim this is a head and shoulders formation, because, you can't have like one shoulder like this and one shoulder being like one,
Oh, I see. In time, you mean?
Yes. I mean, in order for that to become a head and shoulders formation, we will need to also take a little bit of time, forming that shoulder, so it has some analogy. I mean, it doesn't have to be, the equal length, but it can't be like, just 10% of, this.
Anyway, well spoken by a technical analyst. Many
By the way,
technicians are anal about charts, don't you
yeah,
think?
that is
So
that
that's
is.
why I say technical analyst.
Now, on the other hand, I know
Thanks for
that
giving me the freedom to be me here every day, guys, and put up
absolutely,
with me. Thank you. I'm a
absolutely.
mashugana. All right. Anyway.
By the way, this is one of your favorite charts, the gold-silver
Oh, yeah.
ratio. Keep in mind that the gold-silver ratio, after clearly breaking down from a multi-year ascending wedge, is currently, as you see, finding resistance in this wedge's support trend line, which is now acting as resistance, as I said, right? So I want to see what's going to happen to the gold-silver ratio from where we currently are. Because, you know, we've had a very healthy 3-day recovery, actually 2-day recovery. Yesterday it was an inside day. And I really want to see if we're going to get a reaction from here, because if you really want to be short this ratio, I think that the retest of this trend line is definitely an interesting opportunity. So gold-silver ratio also worth mentioning here. Now, another metal worth mentioning, I mean, we were showing, you know, how sharp of a rebound it had, is platinum. Platinum actually, for a day, for a little bit more than a day, managed to find itself trading above this multi-year descending trend line support. You can see it here. But, you know, probably this false break higher, you know, is quite a better signal, at least in the short term. So platinum, you know, attempted to make like a huge move, because that would be the first really bullish development we've had in years in the metal. So far it has failed. So, you know, it's another metal I'm looking for, because quite frankly, once we break and stay above this descending trend line, I think that platinum is going to be a very interesting proposition for a longer term trade higher. And here is palladium as well. We had the other day a question about palladium, but we didn't have the time to cover it. Palladium recovering once again towards this descending trend line. Perhaps this is a larger formation, like a larger triangle, in which case, needless to say, you know, the move higher so far has been not anything but impulsive. So I think there is a very decent risk that palladium is going to end up getting rejected from that trend line once again, and perhaps, you know, resume its consolidation, you know, for longer. Okay. So palladium is still recovering quite nicely, quite close to the highs. But personally, I don't see any evidence that I would be looking to, you know, buy it. Of course, you can buy it if it breaks out, because, you know, you can trade the breakout. But personally, I don't even like the way it rebounds, you know, for, you know, attempting to go to higher highs. So bottom line, I do think that palladium, I was looking to short it if it broke below this channel. It never did. But the way it's been recovering is still telling me that, you know, the next opportunity will probably be to the downside, you know, and probably quite soon. So I'm still monitoring it. Now, copper also recovered somewhat. I mean, we had a nice 2-day recovery. But, you know, all in all, still very near the lows, as you see, and still not in a rush to go anywhere fast, which means that, you know, I'm paying attention to it, but I'm not really looking in trading it anytime soon. I think, you know, there are better opportunities out there than copper, but, you know, since we have a look at it on occasion, why not have a look at it today again? Now, about the DXY, we covered everything we had to cover yesterday. I wanted to mention crude, though, because crude was quite devious. I bought crude the day it was breaking out. I actually jumped the gun. I rarely buy intraday, but I felt like it might really run away based on the price action we had that day. And then we had that reversal. So, you know, I got stopped out of it because I was very, very tight with my risk. Since I was buying it intraday, I wanted to make sure that, you know, I'm not going to get caught in the wrong side of the market at a false breakout. And indeed, we did have a false breakout. And the next day, we actually continued lower for some time. And then we reversed higher once again. And now it's legitimately breaking out from this triangle. So I have to say that I might be out of a position, but my position hasn't changed. That this breakout, which unfortunately had to go through a false breakout first, is likely to bring crude higher. Now, where to? I do think that the first area of resistance is going to be 60.40 to 60.80. You can see 61.8 is one level, the other one is the previous high at 60.86. So I do think that it is extremely likely that we're going to retest that high, but it is also very, very likely that we're going to see higher prices than that. So I wouldn't be surprised to see a continuation higher towards 63. So quite a nice move here. I tried to catch it. Unfortunately, I wasn't lucky in that respect because the market knocked me out first, but it is what it is. It happens on occasion. Now, USD SEK, USD NOK, quite a nice rebound today. As Stelios mentioned before, you can see it here, despite crude's overperformance. So that is something to note. Now, I still believe that there is a decent chance that neither of those are done moving lower. So I would still be looking for opportunities to be short the USD NOK, perhaps at 901, an interesting area. And the same deal here with the USD SEK. You can see that the USD SEK keeps getting rejected from this ascending wedge. So I do think we might see something like that. Okay. So USD SEK, I wouldn't be, I know that it remains in an uptrend, it's quite clear. But I do think that, even if it wants to just post a correction lower, it should push towards 950 once again before, resuming any possible upside. Now, having to do with the USD MXN, I know that Blake is looking to buy it. Personally, I'm not looking to do anything with it. I mean, I don't want to take the chance of buying it in the middle of this triangle, but I can tell you one thing for sure. I'm definitely going to be all over it once it breaks through this triangle, because this is one of the cleanest technical formations out there, being in play since late 2016, early 2017. So that means that soon it's going to be like 3 years that we're going to be in this range. And I do think that once we see a legitimate breakout from this range, there's going to be a big sharp move. Now, which direction is that going to be? Yes, statistically speaking, there is a good chance that it's going to be to the upside. Why? Because we entered this multi-year consolidation, from the downside, okay, after a strong uptrend. So, there is a very decent chance that we're going to continue higher once we break above it. But, no reason to actually, place any bets. I think that, this is the type of formation that you really want to trade after you see a breakout or a breakdown. So until that happens, personally, I'm just an observer. Once it happens, I'm gonna be, a participant. Very gladly be a participant here. Okay, so let me go through some of your questions and see. What do you want to look at? Germany can counter the crisis with many, many billions of euros, says German Financial Minister Olaf Scholz, according to Reuters. Yeah, we were reading about that plan yesterday, having to do with some kind of fiscal stimulus, and I have to be very, very honest. If there is one country, one of the few countries that can actually use fiscal stimulus, so Keynesianism, in somewhat of a healthy manner, that is Germany, because Germany has been and has remained since World War II very, very, very conservative with its finances, which means that, yes, Germany has the fiscal space to be stimulating during the next recession. It's one of the few countries, though. So if you're asking me if Germany can solve the global problem by being stimulative, the answer is no. It can definitely help the situation locally. It can somewhat also help the Eurozone economy. But, beyond that, I would be quite skeptical. Okay. Now, of course, if other countries also decide to stimulate fiscally, in the short term, that will have a positive effect. In the long term, it won't, because if you have the fiscal space to stimulate, then it's worth doing it. If you don't have the fiscal space to stimulate because your deficits are already, skyrocketing, and your debt is in an unsustainable path, then there is a very good chance that if you try to go through fiscal stimulus, the market is going to penalize you more than the beneficial effects are going to help your economy. So that's why I said that Germany is probably one of the few countries that can actually be fiscally stimulative without having any market repercussions. Now, I see a question. What are your thoughts about pound CAD? Okay, sure. Let's have a look at both Euro CAD and pound CAD, because we haven't done that during the past few days. Okay, this is the second time this happens today. Give a second to my browser, because although restarting, something seems to be slowing down things here. Have a wonderful trading day, everyone. Thanks for the great analysis, Steve, Blake, Stelios and Dale. Our pleasure, Cyril. His vote was some 280 against 46. Yeah, we read that. Just bought pound at 123.35 and doing very well now. Yeah, I would be a little bit careful if I was you, for the simple reason that we are on resistance. Okay, and you can see it here as well. Stelio. There we go. So finally we got pound CAD and Euro CAD. There we go. So pound CAD. First of all, look at this false break lower. We had that happen once again back there. So we've had an interesting false breakdown, but on the negative side, I still don't see this rebound having any real impulsive characteristics. More likely, it looks to me like some type of a triangle. So false breakdown, so good news if you're bullish, because false breakdown can usually lead to bearish price action. But on the other hand, this might be a triangular continuation formations. So as long as we don't break above 164, I would be quite careful here, because we can easily see a continuation lower. Now, EuroCAD was quite a tricky one, because we got this nice descending wedge. We broke higher in what looked like an impulsive move in the short term, and then we started getting choppy price action. So in all honesty, I had quite a strong opinion that EuroCAD is going to produce at least one more move higher before it resumes lower. But it actually didn't do that. It dripped lower and pushed this long-term trend line support. So I'm quite surprised, I have to be honest, because the type of price action, made me feel quite strongly about the continuation higher. I didn't trade it regardless, because it's a cross that wasn't moving that fast. So, I had other things I was focusing on, but, I could have actually ended up trading into the upside. But it dipped lower. And, it's at new lows. It's at a 127% extension of this last rebound. It has broken this trend line support. Now, we do have a cluster of supports a little bit lower, roughly at 144.80. And, we do have an equality target of this move lower to one more move lower at 143.80. So, we might make it there before we produce something else. But from a technical perspective, I don't like this price action. I would really not trade it at the moment. I mean, yeah, it remains heavy. There's no question about it, especially since it failed to produce one more high. So I would definitely not attempt to buy it right here, right now. Gun to my head, I would have to be short after what happened. But, would I be shorting it? Nah, I'd rather, trade other stuff. Request comment on 2-year Treasury note futures. Yes, sure. Let me remember what. I rarely look at them, I have to be honest with you. I look at the 10-year and the 30-year. Those are the ones I'm mostly focused on. The same thing with the bonds. So anybody have a ticker for the 2-year? And I will gladly have a look at it for you. Any opinion on the Swiss? Yeah, until somebody gives me a ticker so I don't have to look for it. Let's have a look at the Swiss. And yes, I do.
Also, Steve, our guest is here.
Oh, sorry. I didn't realize that it's, yeah, you're absolutely right. So let me cover the Swissian, and I'll cover the treasuries tomorrow and the bonds tomorrow in any kind of maturity you wish. Okay. So, the Swiss rebounded. It has broken through this descending trend line resistance, but the type of price action here doesn't really tell me that I need to be bullish. So probably we should pay less attention to this trend line. And admittedly, it looks to me like it will again roll over and head lower from here, from a little bit higher. Let's say, from the previous high at 99.75, but I wouldn't be buying the USD Swiss here. I mean, this move looks to me either like a consolidation, a bigger consolidation, or a short-term rebound here. I also do take into account that we've broken down from this larger formation. You can see this ascending wedge. So I would be very, very careful. I would much easier be a seller in the USD Swiss from, even from current levels than anything else. And also that bodes well with what Blake was looking for. He was looking for, a trade higher in the Euro USD following the ECB. As you understand, of course, if the ECB causes the Euro USD to move higher, we will at the same time see a decent move lower in the USD Swiss. Thanks, Coach.
You're welcome, buddy. Okay, everyone, stay tuned for Matt Thistle, because I'm telling you, you will gain perspective. Okay, Matt, welcome back, buddy. I'm promoting you to a panelist, and let me make sure that you're unmuted. Didn't work. Okay, hold on. Oh, there, now it did. Are you there, Matt?
Hello.
Hi, Matt. How are you?
Hello. Can you hear me now?
I can, buddy.
Okay, perfect.
Welcome back to Face, my friend.
Hi. Thank you for having me again.
So you're a West Coaster too, huh?
Yeah.
I used to say, Matt, because I've been in California many years. When I left Chicago at 22, I would say, my life is like a farmer, up before sunrise, asleep after sundown, except that I nurture seeds of greed for the harvest of commissions.
There we go.
All right, so there's
commission.
we're using Zoom now, so there's a green box that says share, and you just click that, and then you could show what's on your radar.
Okay, so there's the share button, and then I probably click this one over here.
Beautiful.
Okay. Now, do you see this toggle
Yeah.
bar here?
Ghost Month is up, date of the Ghost Festival, things like that.
Cool. Yep. And all charts and stuff. Perfect. Okay.
Okay, so I have to say I'm looking forward to it. I never know sometimes the first time I interview someone, but then I know within 5-10 minutes if there's someone with some real skills, and I include you in that, buddy. So
Oh.
I'm excited to hear and see what you have to offer today and what
Awesome.
you're seeing, buddy. So
Okay.
So we're gonna start off with Bitcoin.
Sure. Yeah. I'm just gonna.
So last time we were talking about that we could pull back because I learned about Ghost Month from you.
Okay.
And then I brought it up to all the other crypto people after that interview we had. So
Okay.
Ghost Month, not much action. And I remember you saying, wouldn't it be nice if we had a sell-off in August and then some type of retest into the equinox? And we're not that. See, I remember everything. So
Yeah.
what? Maybe that's going to happen here.
Well, yeah. So like over here, we're not on air yet, right?
Yeah, we are.
Oh, we are. Okay. Hello. Okay. So.
All right. This is Matt Thistle.
Hi.
And why don't you give why don't you give just a quick 2-minute who you are?
Sure. So my name is Matt, and I started off in music here with Twitter. So it's my handle here is DJ Thistle01, and also Coin Street News. We have a separate Twitter page that is just analysis and breaking news and none of my worldly comments. And then also coinstreetnews.com is a blog. And yeah, I like crypto and commodities, and I'm glad to be here this morning.
A true action junkie, Matt Thistle. So,
Yeah.
all right, buddy. So
sure.
Go ahead.
So last time I was here, I think it was the 19th of June or the 9th, something like that.
Yeah,
so
in that range. We were making new highs, and I thought we might have a third drive, and then it accelerated.
Right. So that was right here. Then I think that was the 19th, right up here.
Yeah.
So and at the time, that was right before the breakout, and we were talking about 3 drives versus 3 pushes.
Right.
And we were 1, 2, and right here. So that was what I was calling a 3 pushes based on a Bollinger Band methodology. And I was looking for a basic 3 drives, which was this 1, 2, 3, and then that slight bit of acceleration we got at the top here was the out.
Yeah.
And we had a pullback into, well, here was the lows here in July and a rebound, and that failed, came down to, here's the 15th, and that is Ghost Festival. And then we have here on the 29th.
I dressed up as Casper.
There we go. I'll pull that down a little bit.
Because I'm a friendly ghost, buddy.
And then right here on the 29th, it retested that low and bounced. And that was the last day, August 29th, 2019, of Ghost Festival. So it's basically, you see, so for people listening, Ghost Festival is a time where you're not supposed to be over invested. It's supposed to be, bad luck, and there's a lot of Asian traders and a lot of influence in the market, and especially in crypto. So we saw that big run up into June. It ends for the summer. We have a pullback and a bounce. Other people might be thinking extension. It's not, because in here, the Asian influence in the market is, pulling back for the summer and going into Ghost Festival. We have the bounce. Now, the key, what I was saying, at least I hope I said it on the show, was that the key is that the low usually comes in near the festival date, not the front of Ghost Month. The festival date tends to be the low, and then after the festival, you see often a little bit of consolidation, which we did. It was perfect, and then it retests it as it exits Ghost Month. And if Bitcoin is going to have any sort of real bull market for, like into Black Friday or Christmas, we would want to see at worst some kind of like that action or something like that.
Okay.
We don't necessarily want to see it break down from ghost month lows.
What happens if it does? It almost looks like a descending triangle to me.
Yeah, exactly.
Yeah.
Yeah, so I mean, a possibility here that we could be seeing is that like a lot of the fundamentals for Bitcoin seem strong right now. So let's go to this chart over here. We have backed opening on the 23rd. We have a CME expiration, and then we have 3 ETFs that have to be decided on. 2 of them are final decisions. That's all in this big block of window here. So when I look at a lot of triangles, I kind of look for 3 touches, and then the 4th is the breakout. So it kind of looks like that's all playing out. And if we do have a low into equinox again, that would be right as the triangle hits all its fundamental analysis here instead of just pure technicals over here. So, you know, yes, it does look like that descending triangle. It could be possible that this type of formation is going to be a little bit Wyckoff-ish. And if we were to go something like that,
7,000.
yeah, who knows?
Isn't that what it would measure?
Yeah, it would be down in here anywhere from 83 to that would be and hopefully if that happened, it would just be kind of like a spring, right?
Well, what's the difference as long as you're on the right side of it?
Yeah, exactly.
So whenever I hear someone say hopefully, they're telling me they're biased.
Yeah, so my bias there would definitely be that if it breaks down, that it would be a Wyckoff like spring and then back up into that range and out.
All right.
Yep.
That could happen. 7,000 and then, you know, maybe all-time highs, huh?
Yeah, well, when we were, it's definitely a big analog of the old gold fractal, and I think I showed that before, and some other shows have been on recently. People always laugh and go, well, they're 2 totally uncorrelated assets, and that's 30 years apart or 40 years apart. That has no bearing. But really, something I was talking about with a person was that, you know, what comes first, the chicken or the egg? Because, you know, we see a lot of these market patterns are exactly the same from a Wyckoff or Gann or Livermore era versus today. So today we have all these algorithms. So is it that we have human psychology and that we play into our greed and fears the same way throughout time? And then as computers came into the picture, you know, the computers quantified that human emotion, but then because it's quantifying it and run with, you know, like the liquidity is being provided basically by trading robots now. So is one, you know, making the other one happen now, you know, whereas before it was pure humans in the market, and now it's algorithms playing out these emotions in a mathematical way. So we'll see.
Yeah, that's interesting because, you know, classical things, and I know you're into them, or you wouldn't. I've never heard anyone talk about Livermore trading techniques. I'd be interested to hear a little bit about that. But, you know, all of these classical technical patterns, they go back to the masters, and, you know, like Solomon said, there's nothing new under the sun.
Yeah.
And, you know, we still have stop hunts done by, like you say, algos, where they'll come in, that's where the stops are, they'll go for the liquidity. But the same thing happened before them with open outcry. Men did it. Men would bid a market up into buy stops or offer it into sell stops. Now it's just machines. But really, a chart is a chart for all time, isn't it?
Yeah, it seems as it, like, I think there's enough historical evidence in front of us that suggests that. Yeah, totally.
Yeah.
Okay, so I'll move on here. Yeah.
Yeah. So you were going to talk about some currencies and.
Yeah, and I'll just finish up with Bitcoin. I know last time we were talking big picture as well too, and with Wyckoff stuff, I like to look at 3 steps and a blow off. So I was showing that on the biggest picture, like the all-time chart here for BTC, kind of 1, 2, 3 and a blow off, 1, 2, 3 and a blow off, 1, 2, 3 and a blow off. We could be sort of finishing stage 1 here, which could be of a grand cycle, 1, 2, 3 and a 4th.
Okay.
I do a little bit of astrology and whatnot with trading, just as pivot points of market. I like to look further out, and you know, I look at 2026 as being in that hippie model, a particularly difficult time for Bitcoin. So I wonder if, you know, we could be coming into this, you know, four waves here, and if this 1, 2, 3, 4 is the end of a 1, 2, 3, 4, and you know, maybe at the end of this we do see sort of the end of the start of mass adoption for Bitcoin. It'll be interesting to see. I think the next few years holds the key. So that would be at 1, 2, 3, and then 4 and off. So Bitcoin will be very interesting for the next while.
Do Geminis make good traders because they're schizophrenic?
Yeah, right. They have somebody to talk to. It goes wrong.
I've never heard that one before.
Anyway.
I do talk to myself. All right, that's very good. All right, go ahead, buddy.
Just touch on metals briefly, because there's been a lot of move in gold and whatnot, and I think a lot of people want to see 17 or new highs. You know, obviously gold has broken highs in most other currencies other than the US dollar, and
almost all of them.
Yeah, but I don't know. My gut feeling, I like to go off of charts, but every now and again my gut, not my feelings, but my gut instinct kicks in, and it tends to usually not be too wrong. And my gut kind of feels like Trump is playing the trade game so that he can manufacture ups and downs in the market and not have the market or recession sort of create themselves. I know that sounds too smart for him, but I feel like there's a game being played so that the trade wars can kind of work a lot of itself out before coming into an election.
It's funny, I saw a cartoon on Twitter that shows him with his phone and, you know, screens of the stock market in front of him, and he's looking at the charts and getting ready to do a tweet.
Yeah, there we go.
Implying he's trading.
Yeah, and it would make sense, and it would be good for him to, you know, have the market have its wobbles, but then, you know, recover coming into election season, and then, hey, I told you we have a good economy, blah, blah, blah. You know, gold has just moved into, you know, a technical kind of area where it should pull back, and it has. So, you know, that would be a perfect time for him and the markets and everything to kind of pull back a bit, and maybe things get resolved, and let's say he wins again. Just purely based off of, you know, statistical factors of a lot of presidents with where he's at with the economy.
Well, you know, Matt, there are a lot of deflationists that people are laughing at now that, you know, missed this whole gold move because they thought before we'd have a true bull market, we'd see it under 1,000. Do you think that because now it seems like that is such a contrarian call that it could happen?
Yeah, it could happen in that. Here, let me just delete some stuff here. If we were to look at, kind of extrapolate for the amount of time today, but if we were to extrapolate the data from the last bull to bear and this current one, I think that there is the option for it to go down into 800s, and that would be, you know, all of the trade sort of tensions getting worked out, and then everything being fine after 2024. I kind of think that after a second Trump win, that Republicans would be in tough water, and that there would be a ideological pushback in America, which would probably see the Democrats win again. And, you know, unless it's a very stock-friendly person, I think the market might, you know, for how high the market is right now, might see some problems. So if, you know,
okay, so the bull market continues under Trump until for another 4 years, and then, you know, someone like Sanders who will be 99 after that, that would be it. So actually,
so that would maybe make gold do something like that, where we pull back into trades. Here, delete, where we pull back into trade wars getting worked out a bit, and then maybe, you know, kind of like we wobble, and then we got echoes of a new election coming, and then, you know, a Democrat boom, and then it's
okay.
So because it's such a long picture with gold, it's not like Bitcoin where we're looking at that big stuff in a matter of years, right?
Okay.
So, and then with that said, you know, we've had silver finally kind of return back to the mean of its highs and retesting here the breakdown.
Well, I remember the gold silver ratio in the 40s. So, I mean, it's not even close to that.
Yeah.
Still, you know, upper 80s, but.
And the long-term view of platinum has just been lower and lower lows on the ratio, and this wedge has finally got the price back in. So it's going to be interesting to see how that all plays out with gold. I want to move on to cannabis stocks a bit.
Okay.
We've seen a huge speculative run-up into the legalization in Canada last year, and then the tops on almost every market was the day before legalization. So by the rumor, sell the news.
Wow.
People have been just selling down like crazy since legalization. Most of the reason, like, there's going to be sell down because of the speculation part. Now, a lot of the misses that keep pulling down the prices is because the government did a horrible job rolling out legislation. We didn't just take our existing models and our existing stores and give them the right to operate legally. Everything got shut down and everything had to reapply, and everything has been painstakingly slow, and that has made everybody miss revenues, and everything has crashed. So we're going to use Tilray here. It's just indicative of the rest of the market. So starting in the next few weeks, mid-December at the latest, we're supposed to be having edibles and CBD and other things hit the shelf. So there will be more products for the market, which should increase revenue. And as the first full year has gone by, and finally municipalities are getting more and more stores on board, like approved, I should say, more stores would meet more legal demand. So I think more products hitting the shelves and more shelves to be hit should make a lot of these charts stabilize. And you know, back to what we were talking about before, gold and Bitcoin, two separate things, two separate scales, but the charts look the same. Here again, here's Bitcoin, but against, you know, Tilray, two separate things, two separate charts, two totally separate, you know, but it's the speculativeness, the emotion on the way down, and now we're seeing these fundamentals in the next few months. So I think that people should be looking at cannabis stocks again, if that's their thing.
Nice.
We're going to go into altcoins here. So it really looks like Ethereum is trying to test a breakout of these downtrends, even if it's...
Matt, excuse me, what's the symbol for Tilray again? TLRY?
Yeah.
Thank you.
So, you know, if this lines here are pretty sloppy because the last show I was on, it kind of got moved around a bit, but the general theory here is that based on cyclical dates and when alts tend to move, that we should be expecting something either between now and the 23rd of September, I think, or if we don't have a big reaction in the market, then it could be December 7th to 21st would be the next time I would be looking at that.
You had something on ZAR you wanted to show?
Yeah,
ZAR?
I did, correct. So something I tweeted about recently, one of those, I hate being right about this kind of thing, because a while back I started talking about what was happening there, and it seems like with the land grabs, it's kind of like Zimbabwe 2.0. Wow. So I think that unfortunately is a market that FX traders should continue to watch, because you know,
it's going to continue to weaken.
It just,
so long USD ZAR.
Yeah, and there's no fundamentals right now saying that anything there is going to get better, and it sucks, but you just kind of got to take opportunity when opportunity presents itself.
Yeah, there's no Mandela on the stage there.
No, and the fact that it's not, you know, at the beginning it was like, okay, well, there's going to be problems with food manufacturing and probably water with the way water's been going, and you know, it's going to be outlash against whites and white farmers, but it's going to be, you know, the blacks and of course the children that hurt the most. But now what we're seeing is Nigerians being attacked, and Tanzanian truck drivers aren't even coming in the country. So it's beyond even just whites. It's just a whole big bad mess. Off to our next one.
Don't take a vacation to Pretoria.
Yeah, exactly. Which is actually a nice segue into the next part here.
Okay.
This was an
I
article.
do that.
Yeah.
I miss the segue.
Perfect. So capital flight in Bitcoin. So often people talk about, there's problems in China. People can't get their money out. Bitcoin is rising, blah, blah, blah. It's China. So, but I wanted to try and quantify that. And I think that there's misnomers within that. I don't think there is a lot of capital flight. And I think it kind of happens after the fact when people aren't expecting it. So first thing, capital flight versus China and devaluation. I think that there is a clear correlation between devaluation of, renminbi and or yuan, and Bitcoin, and there was a relationship between that in 2015, 2016.
Yeah, 15 was I remember in August.
And recently it has been as well too. So I thought to myself, oh man, I wonder if Bitcoin's going to get going because of Hong Kong, and is Hong Kong going to lose a dollar peg, and this could really get out of control. And then I looked up. So what do we got here? So this is local Bitcoins Singapore. So local Bitcoins is, to me, the way that the street level user that might not be able to have an account is going to be able to way to find Bitcoin. You know what I mean? Yeah. And this really looks kind of reminiscent of the recent Bitcoin price chart, up, down, bear market, little bounce, back down. And over here to China, kind of looks the same as Singapore, right? Singapore is totally stable. China's has all these issues, capital flight. No, that doesn't look like capital flight at all. It looks like the chart. Hong Kong, same thing. I don't see none. Less. All the huge impact over the last few months, nothing. So no capital flight. But let's look at Venezuela.
Oh my God.
Let's look at Argentina. And when has Argentina, it's been bad. And where did it really get bad and default? So my sort of thing is, I don't think there is capital flight, but I think there is devaluation. And I think it's one of those, do people need Bitcoin? And it's kind of like, no, not until it's too late, is kind of the catchphrase that I think is presenting itself. So I think, in retrospect, after looking all at this chart and everything that is happening socially and fundamentally, that we're probably going to see this kind of thing happen there as well too. Because did they need Bitcoin a couple of years ago? Not really. Maybe it's flowing with the market, but as soon as people are lighting each other on fire in the street, things are probably going to go wrong, and people like us are going to look at the chart and go, I should probably be looking at shorting this market or whatever, and then that just compounds all the problems, right? So I think this is a really interesting narrative to watch, the capital flight versus economic and monetary.
Do you have any your gut, which we all have trader intuition, you have any intuition about where the next important bout of capital flight might take place?
I don't. I don't like to speculate on that kind of, because trying to figure out a why just often makes you just kind of crazy. Why does it happen? So
are you still constructive on risk in equities, and any view on what's happened in interest rates? And we could wrap it with those if you have any comment on it.
Yeah, not too much comment on that. I think that the general market, I don't think it's done yet. And I think if Trump can do kind of what I was talking about before that, I think that leaves the market in a risk-on scenario. And I think is your astrological
stuff pointing towards the re-election of President Trump?
I haven't even looked at that yet. I've just been kind of looking at what's been going on. Yeah. If we got 2 minutes.
You extrapolated earlier in the interview.
Yeah.
Go ahead.
Yeah. So
we have all the time you want.
Sure. Okay. Thanks. So the last thing I just wanted to touch on was, because you mentioned Livermore last time, and shortly in the beginning of this one, and I would love to do that. I've seen other people kind of talk about parabolas, but that's one of the things I really enjoy charting and got me into doing well with altcoins, because altcoins in the crypto space move so quickly, and the parabolas manifest themselves and mature very quickly. So an easy way to look at this is just like a whole bunch of accumulation along the bottom, and Livermore would kind of do his sort of that alligator channel kind of thing that happens, and then it pops out for its final parabolic move at the top. How I like to do it is look at it with structure, kind of like back where I was talking about here, the 3 steps and a blow off. And I think that that is indicative of the structure of all parabolas. So on the short time frame, it's like 1, 2, 3, and this blow off there, right? And you can kind of just see it manifest itself all the way up. And then on the bigger scale, 2, 3, and then up. The important part to remember is that you always have a long accumulation, this kind of channel, which is often broadening, will often have the first 2 steps in it. And then the 3rd step may not always have a large retracement. Sometimes, you know, on a larger time frame, it might retrace out and then go like that. A lot of times with altcoins, you'll see it, you know, just make a little hitch and then go straight up. So the placement of that third you know, kicker is a little bit
and this is what Livermore traded the tape with.
Yeah, exactly.
Wow.
And then the back side of that, which is I think fairly important for crypto, is that there's usually just a straight sell-off afterwards.
Wile E. Coyote. You know, Matt, that what you just showed is a graphic illustration of an expression that markets bottom in silence and top with violence.
Yep. Sounds
you like that?
Yeah, I like that.
And you should talk to Don Mead at 7 Sentinels. He's a Livermore fanatic, and I bet you guys could learn some things from each other at 7 Sentinels. He's really a great guy. You'd like
awesome.
him. Okay,
I'll check that out. Yeah. So I just, you know, main thing to watch for people is that, you know, there's lots of ways to convolute it, but you want to be looking at, you know, sideways. You know, you'd be a typical kind of Wyckoff thing here if we were to pull in, you know, a breakdown, a retest, you know, markups, those kind of thing. Something I would like people to notice is I have volume on the chart, is we see this ramp up here.
Yeah.
Volume each time, and we have these spikes. Now, I think this is you know, this is just a people playing breakouts kind of thing. So you have this huge influx of volume on a breakout. Another thing to remind people of is, so maybe in Bitcoin and other charts or other markets that have leverage, is that you're going to be seeing a lot of these spikes of volume, either selling to the downside or the green buys to the upside. Is often the market wants to push, and then you think, okay, maybe it's done, and it has one last breakout, and that last breakout is where people are basically getting their positions covered or stopped out or liquidated, right? So that big push of volume is liquidations, and we see a big push of volume here at this top, this big push of volume here at this top. And it's important that, to me, if you're trading parabolas, you got to understand that once you see a reduction in volume and a new high after, like if we were to zoom this out a bit, and I'll move this accumulation channel over, that you're kind of getting this ramp in volume here, here. All the new highs and all the new volume is increasing with it. And then once you start getting new highs with reduced volume, you're looking for your exit. So that's what I would you know, want people to look at when they're looking at any parabolas, or especially if you are in the crypto market and you're wanting to trade altcoins. Once you see them break out of their range and retest, and you're now following the trend. So now, you know, so we have accumulation, we break out of the range, we retest. As everything is retesting, you know, we are now in a trend. You can probably do well by just, you know, following the parabola upwards. Obviously in here, we recheck ourselves. We kind of make new highs and consolidate, and we just kind of draw that out again, and the same thing happens. But this time on this breakdown, we already know that we had new highs on reduced volume. So this time when market comes down to our moving average and things like that, we're much more tepid when coming into the market. And then finally, when we get down to right here, old swing lows again, boom, we have a nice pop. So these are often lovely times to hit an altcoin market. Maybe you're not making these massive gains, but you can look for that pattern and get these, what's coming in here, say like 620. There's not much liquidity here, 720. So even if you're banging out 20% gains, that kind of stuff accumulates quickly. You don't have to be the guy that's, you know, going for broke every single time. You can look for accumulation, increase in volume. Once you start following a trend, you're just looking for volume to increase. After you make a new high with reduced volume, you're looking for your way out. And then after your way out, your bounces, you're looking for, you know, maybe here, 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 bounces off an old swing low. So, yeah.
Wow. I tell you what, Matt, I really enjoyed it. Really interesting insights and perspectives. You didn't disappoint.
Thank you.
Me, you know, excellent presentation. I learned from you today, and I'm sure anyone who watched this live or the video will experience the same thing. So thank you very much, my trading warrior brother, for coming back. And I'd like to have you back again, like, you know, every 2-3 months, and
love it.
Keep in touch, and you kind of become a semi-regular. So
thank you very much. I feel honored to be part of the crew.
well, much respect from me. Okay.
Awesome. Thanks a lot.
All right, good hunting, and may pips rain down on you, buddy.
Okay, thanks a lot.
All right,
bye-bye,
take
everyone.
it easy. All right, everyone, that was Matt Thistle, and follow him on Twitter. And I just want to show you something before I say goodbye. Turnaround Tuesday trade was gold. Interrupted Blake like I interrupt everyone. You know, we were putting in a higher low here. It was a 1 hour. Yeah, it was right here. So decent scalp, right, from $8. Maybe we're going to moving average, maybe 15.20. That worked. The yen, not as great, but still could work. Looking at, you know, 107.08, and then maybe test of the breakdown. So everyone have a great day, and I'll see you in tomorrow. So good hunting, everyone. Any questions before I go? Anything in chat? Let's see. You're welcome, Scott, Ingmar. Okay, everyone. So that's a wrap. I'll see everyone tomorrow. You're welcome, Claudia. Hope you maybe caught a little gold action there. And I'll see everyone tomorrow. Remember, don't just count your pips, count your blessings. You're welcome, Brock. Adios.